Hi, everyone. Ben Black here with Akkadian Ventures and co-founder of Raise. And we're here on the tipping point, and I'm here with Bruno Raillard of Frst, a seed fund in Paris, based in France. And, you know, at the end of the day, we're all fund entrepreneurs. But when you come to San Francisco to start a fund, it sometimes feel like they give you one with your first apartment. Like you get the keys, you sign up, and then they give you your seed fund. But you started a seed fund in France, which is there's not a lot of them, correct?
Yeah, well, it's a growing breed, I would say.
So tell us, how did you get started in the seed business?
Yeah, it's quite simple. It goes back to 2015. At the time, I was working in a family office with a group of people that were very entrepreneurial and very driven and ambitious, and many of those people left the family office to go start companies that are today among the most prominent startups in the French ecosystem. And working alongside those people, you saw that there was, they were embodying kind of a new mindset in the French ecosystem of building global scale companies and not being apologetic about being French and having ambitions. And so that was on the entrepreneurial side. You had this type of new people that were also maybe building stuff on the shoulders of giants and seeing former French entrepreneurs having built great stuff and gone on the Nasdaq and so on.
That's great.
So that was exactly the mindset you are bubbling in the entrepreneurial landscape. And on the other end, the French VC ecosystem was not optimized for that. It was just more a coterie of people focused on medium risk, medium reward opportunities, because that was what was the ecosystem building at the time. And so we felt that there was an opportunity to actually just import the American VC model and tune it to the needs of the French market and get started with that.
So how large was your first fund, and what fund are you on now?
So the first one was actually we cheated a bit because we had the backing of the family office I was working on, and so it was not a fund per se. It was more a holding vehicle through which we invested across 14 companies, and we invested a total of 40 million euros over the course of the first 2-3 years. And so I mean, the message we were carrying of being the most ambitious VC for the most ambitious French founders, it kind of resonated with a large part of the ecosystem, and so we found our public very quickly.
I bet.
So after 3 years, we had kind of outgrown the capacity of the family office, and we also felt it was the right time for us to become more institutional and to make sure we were a brand with a long-term base of investors and a long-term anchorage in the French landscape. And so we spun off the team. We started to raise an actual fund. We started to meet with tens and hundreds of LPs, explaining where we were coming from and so on. And so we raised our new fund in 18 months. Did the first close in 2019, and that's where we are today.
Okay, great. And so how many investors were part of your first close, roughly?
Roughly 30, around 30 people, 30
And,
investors.
and how did you find them? Where did your first investors come from?
I think because we were a first-time fund, and because the European landscape is still relying on a few large institutions, we started very early on with large potential anchors, like the European Investment Fund and BPI, which is the public investment body in France. And so we started a relationship with those people to find an anchor, and a few other fund of funds also with whom we started discussing. So we had this stream of focusing on big LPs to anchor the fund. And in the meantime, we're also, entertaining easier and faster discussions with a few family offices and entrepreneurs from the European landscape that helped us also build a narrative and fill up the fund.
And so when you went to talk to institutional investors, was it harder or easier than you thought?
It was, I think it was a bit of both, maybe. I think in retrospect, what helped us a lot, because it was also true, is that because our first fund, which was the kind of MVP fund backed by the family office, was we had decided to, from the get-go, to build it like a VC fund, from branding, deal making, process, mindset, fund structure, reserve allocation, and so on. We had not learned everything. We had made lots of mistakes, but also we had thought about the product as a VC fund. And so when we hit the market for the second fund, it was really a second fund. We had the capability to show a real track record deployed as a fund and not a sum up of a few angel investments we had done on the side.
Right.
And I think it changed totally the message and the narrative and the discussion with many LPs, because we were flagged as a second fund of an emerging team.
It's a great way to start a fund. So tell me about the mistakes you made. You said you made some mistakes. What were the things, if you went back, that you would do differently?
So yeah, the number one mistake we did was to overinvest in companies.
Overinvest.
And yeah,
What do you mean exactly?
because so the number one mistake was not being disciplined enough on reserves.
Okay, on reserves. Okay.
On reserves, yeah. And I think that it was because a mix of us being not disciplined enough and us having kind of a specific mandate from our LP at the time to deploy a lot of capital besides just yeah.
If you have any LPs that lead to deploy too much capital, I'm more than happy to help them. So
Yeah. And but frankly it boils down to us having had to learn a lot how you manage reserves and how to cut your loss and help founders realize that the company is not going anywhere.
That is the hardest decision always, to cut off a project, and it is where most of the money is lost in venture capital, is on follow-on decisions.
Yeah.
So how do you manage follow-on decisions now?
So I think it's a blend of, the first thing is that we have narrowed down even more our value proposition to seed and pre-seed. And so we are very, very much focused on that stage. And so it's very clear to everyone that we are not series investors and we don't invest in pre-series A and series A rounds. And so it helps also frame the discussion around, we just only do our pro rata on rounds that are led by other investors at the series A. So that's one thing. Second thing, in terms of deciding to deploy our reserves, we have a blend of our own milestones that we want the company to reach, for us to have something objectivable to say that we have passed a new threshold of development. Besides just having a new investor that comes in and just puts a big check on the table and us doing our pro rata, we also need to see tangible changes and in the achievements rather than just good money thrown in the company.
And so I'm sure you've met and know a lot of American venture capitalists. What do you think the biggest difference is doing seed investing in France versus seed investing in the US?
It's tough for me to say because I've never invested in seed in the US. So I think that, broadly speaking, in the French ecosystem and in the European ecosystem more broadly, I think there is a higher portion of first-time entrepreneurs that have very specific needs compared to returning entrepreneurs that have already built companies and raised funds and so on. So I think that our value proposition and our scope of discussions with founders is much more geared towards first-time entrepreneurs.
LP relationships can take a very, very long time to develop, and I think it's really important that you sort of take the opportunity when you meet people to try to stay in touch and keep them engaged to some degree, because you never know when they're going to come back and the fit is going to be right. And so are you sort of, do you have a process for sort of keeping LP relationships warm between funds?
So yeah, we've just finished our final close for our current fund, so it's very, very fresh still.
Oh, that's good. Well, congratulations
And
on that. Yes.
Thank you, thank you. And so what we do is just so that we have already and then very frequent discussions with our own LPs. We update them on a monthly basis on the health of our portfolio and how we develop our own company, and that's material that we also from time to time share with the broader base of LPs that like us and track us, and just to keep them abreast of where we're going and what's up with us.
What percentage of your money comes from France versus comes from outside of France?
It's maybe 50-50, probably 50 from France, 50%, I mean, and 50% from Europe.
And so it's all the rest of the capital is from Europe.
Yeah, yeah.
Yeah. And so, how long do you think it'll take to deploy this fund?
Our target is to deploy the fund over 3 years, maybe four, and we are on track with that so far. So we're maybe like 40% in to today.
Yeah. And so, when you go out to raise money again, do you think that you'll go more global and try to get out of Europe, or do you think the European pond is deep enough that you guys can keep just raising capital in Europe?
I think that we're already seeing advanced funds that are increasing their coverage of the fund of funds. I mean, increasing their coverage of the European ecosystem. People like your friends at Top Tier, of course, who have set up a team here. And so I think that we are talking with more and more investors that have an international coverage, and that many of them coming from the US. But besides that, I think that the French, so we are a product which is very focused on a single ecosystem today, and I think it's, for many people, it's just too narrow a value proposition to invest directly. So than to invest through fund of funds, or to invest in more global or at least pan-European brands when you're a US investor. So I think that to have the willingness to focus and to cherry pick investors on local ecosystems, you need to want to have a very tailored strategy on the European market, which is, I think, limited to European investors so far.
What do you think that American investors what don't we understand about investing in France? What don't we appreciate? What do we miss?
I think that the main thing is that France is not anymore just a bunch of communists that are.
Wait, the communists are not in charge, right?
No, they're not in charge. So I think that's the number one thing to keep in mind. People are, they are very ambitious now, and they have just read everything that you can read on ambition and company building and so on. And I think that it's also a great place to start a business on many accounts in terms of the infrastructure that is available to entrepreneurs to build companies. So that's, I think, all the the elements to build a great company are here. The one thing that was lacking was the dedication of entrepreneurs and the ambition to build large companies, and the mindset of creating your company for reaching a large scale. And I think it's a totally changed over the past 5 years. And I think now that we are past the escape velocity point.
So, I mean, in my 20 years in Silicon Valley, I've known many extraordinarily good French entrepreneurs who came to Silicon Valley to build their businesses. They were very bitter about the sort of the labor practices and how hard it was, and how they were met, how their ambition was received in France. I mean, has that really changed?
Yeah, but
people and sort of within the labor market in France?
So yeah, no, that's okay. On the infrastructure side, as I mentioned, I think many things have been simplified, and you can take two examples. One example on the labor law, it has been totally reshuffled, and now it's as easy as in any other country to hire and fire people. And second, on the stock option plans, we have one of the most simple and efficient stock option system to incentivize people. So it's it's totally, you know,
Totally
world
changed.
class. So it's totally changed. And also the government has put in place a flat tax that allows you to benefit from capital gain tax on your equity with a total tax security and so on. So I mean, it's totally doable. The infrastructure is clean and user friendly and entrepreneur friendly. Although it's written in French mostly, so you know it's you need to stomach that. And on the mindset part, it's you know it's day and night. And clearly what you're mentioning of French entrepreneurs going to the US and to Silicon Valley because they were pushed away by a toxic ecosystem, that was the reason why you had no big companies or very seldom big companies built out of the French ecosystem. But you know, this is totally done. It's just another country, another place now.
That's great. I think it's fantastic. I mean, one of the people in the U.S. I tell you, they're it's lamenting sort of this idea that Silicon Valley is no longer so dominant. I think it's great for the world. I think it's fantastic for the world. I think the exporting the model that we have here and making it easy for people to create companies is the best thing we could possibly do. And I look forward to a day when I don't meet a French entrepreneur in Silicon Valley, but I meet one on Zoom like I'm doing with you.
Yeah, that's. I think that, well, of course, the pandemic of last year, it also helps realize that you can build a company across geographies, and because I think there is something that is also very true is that it's much cheaper to build a company in France because the cost of life, the cost of talent is much more optimized than in Silicon Valley. You don't have to pay several hundreds of dollars for an engineer because he just needs to find a place to live and to pay rent for a small flat. And so all this is just, it allows you to get access to talent at a much cheaper cost. And also you have people that are more sticky to the company because you have less, intra-year churn of people going to work and being chased by the other startup and so on. So in terms of building steady teams and robust teams and cost-efficient structure, it's you've got a good trade-off.
All right, so tell us about a couple companies in your portfolio that we should keep an eye on. I know it's hard to pick which babies are your favorite, but I'm going to put you on the spot and give us two companies to keep an eye on.
Okay, so the first one is called Pigment. They are building kind of an enterprise version of Excel for finance teams in like in mid-market companies. So it's kind of an plan built for the 21st century with built-in integrations and collaboration tools for finance teams to collaborate across budgeting and forecasting. So this one is kind of, it embodies all I mentioned in terms of building a great company out of the French ecosystem with top tech talent and also repeat entrepreneurs that have already built successful things in the ecosystem. One of the founders was co-founder of Criteo, the ad tech company that is now listed on the Nasdaq. And the co-CEO, his co-CEO was investor at Index Ventures, which is one of the most prominent European investors. So you've got an example of a world-class team building a world-class company out of the French ecosystem. It's just perfect example.
Awesome, great.
Yeah, sure. The second one is also, I think, interesting in terms of illustrating the depth of the European market, because it's a company that can become a multi-billion-dollar company just selling in Europe. And what they do is they are building simple workflow slot booking tools for real estate agencies to allow them to manage their relationship with all the people that come in to visit flats, be it for rental or for buying. And so all this workflow allows you to enter into the relationship of the real estate agency and their clients, and also the seller of houses, which is a wedge to then build a real estate marketplace from the inside. out. So and just you build that across Europe, and you've got a multi-billion-dollar company, which in a market where you have a very limited amount of competition. So.
Well, Bruno, thank you so much for taking the time to talk with us. I think that I read your website before I got on, and I love on your website what you say about, hey, we're fund entrepreneurs too, and I really respect what you've built, and I look forward to watching it develop, and hopefully we get you back next year to raise, and we'll get you up on the stage soon whenever you're back in the market. Okay.
I hope so. Thanks for having me.
Thank you.